Hi, I'm Steve Bigger, Director of Equity Research at S&P Capital IQ. Welcome to this week's edition of Equity Analyst Forum. With me today on Equity Analyst Forum is Consumer Staples Analyst Tom Graves. Tom, welcome to the program.
Thank you, Steve. I'm glad to be here.
So this week's focus stock of the week is Campbell Soup. Can you tell us a bit about the company?
Sure. Campbell Soup, as everyone is aware, is an American icon, but it's a company that's in the process of reshaping itself. It's made 3 acquisitions in the last 14 months that have added a little over $1 billion of annual sales in our view, and it's also in the process of divesting a fairly large European business that did not seem to have the same kind of growth prospects of the businesses that it's adding.
Mm-hmm. Now, how about the business and industry environment then?
Campbell competes, despite its, strong brand, competes in a very competitive industry where companies are competing on the basis of price, on brand, on value. Campbell faces the challenge of trying to maintain its current brand strength as well as add some additional growth businesses. And we think they're making progress on that. The fiscal year just ended was a pretty good year for their U.S. soup business. Helped admittedly by cold and wet weather, but we think the prospects going forward under a relatively new CEO are quite encouraging.
Now, what do you like about the stock?
What we like about the stock is the valuation and what we view as the prospects for growing attention being given by investors to the changing business mix of the company. The stock is currently selling at what we view as a significant PE discount to the broader food group, and our target price, we think, creates an opportunity or creates a goal of the stock being more in line on a valuation basis with other food stocks. So we think there's a good opportunity here for total return for investors as we look for people to get not only capital appreciation, but also a pretty healthy looking dividend in the year ahead.
And how about risks? What would you highlight there?
What we view as risks for a company like Campbell are the promotional environment for food, where competitors may seek to gain market share by promoting their prices, lowering prices, and making it more difficult for Campbell to maintain its market share. However, we think that Campbell should have the tools to be able to maintain a strong market share, particularly in its primary brands, and we think that the food cost environment is looking relatively benign also, which should be helpful to Campbell. So as a result, although there are risks, we think that is more than adequately reflected in the stock price currently.
Great. Thanks, Tom.
Thank you.
And that's been this week's edition of Equity Analyst Forum. We'll see you again next week.